Hello and welcome back to the complete scalp trading course by Wealthy Education. In this video, we'll talk about scalp trading terminology. Now, in full disclosure, these are terms that are used in most types of trading, but you need to know them regardless. There are some terms that will come up time and time again that you need to pay attention to. There's an uptrend. Now, that is when price is rising, considered to be a bull market, sometimes you will call it. There is a downtrend when prices are falling, considered to be a bear market. There is sideways or consolidation. It's kind of the same thing. It just means we're consolidating in an area. There is continuation. So, for example, we have rallied here. We have gone at an uptrend. We have a bull market, at least on the 1 minute chart. We've consolidated a bit and then seen continuation. So, uptrend, consolidation, continuation. There is a bid and an ask. So the bid right now, at this point, is $452.56 in the SPYs, and the ask is 456 or 452.58. So what this means is, if you wish to buy it, you have to pay what the sellers are willing to sell it at. If you wish to sell it, then that's what the buyers are willing to do. And in the middle, you'll see the spread. In this case, it's 3 cents. It does fluctuate depending on where people are willing to trade. But these are all things that you need to know. So the bid, the ask, the spread. Going long means buying something. Going short means selling it. There is such thing as a gap up or a gap down. Gaps occur mainly on the daily chart, so it's not really a scalp thing, but it is something to be aware of. So, for example, we gapped lower, and then we turn around and gapped higher. Well, when you gap higher like this, especially with volume, that typically means that there's a lot of interest in the market. The size of the gap matters. This is a much more powerful story than perhaps this tiny little gap. So you can see that the market certainly was bullish. And when you see something like that, you may look to buy it by scalping it along the way, upwards for that day. There is what is known as a swing high and a swing low, and that's going to be the same on any time frame. So for example, that's your swing high, that's your swing low, that's your swing high, that's your swing low. You can see that markets rise, they fall, they rise again. So these swing highs and swing lows are worth paying attention to. So for example, this is a swing high. Well, once you break above that, that's a very bullish or uptrend type of signal. It shows that the buyers have gained new ground. You also have terms like breakout. So, for example, if you consolidate, like in this area here, you can come over to the paintbrush and check out the rectangle. Notice that we're consolidating in this area and then we broke out of it. That's all breakout means, is that you have left a consolidation area. You can average up, meaning buying as we go higher, or average down, buying as we go lower. Averaging down, trying to buy a market, is a great way to blow up your account. So you should never do that. There are some people who suggested, in terms of a retirement account, but that's different. You know, you're not scalping anything. You're not even looking to swing trade it. You're looking to hang on to it for decades. So you're getting it at a cheaper price. Any smaller time frame than that, it's a path to ruins. So it's certainly something that you should not be looking to. Each candlestick or day has a high and a low, which is pretty self-explanatory. The highest price reached, the lowest price reached. The close, which is where we close during the day, and the open, which is where we opened during that day, or in this case, it's a week, but it all means the same thing. It's per time period. You could even say, like in a 15-minute chart, there's a high, a low, open, and close. There's also the 52-week high or low. That's just the yearly high or low. So, for example, this is being recorded in 2022, so there's your high for the year. So far, that's your low, but it's not a 52 week, so you actually need to go back 52 candles to find it. It just shows that there's momentum to the upside or the down. A lot of this is really just basic terminology. I'll use this during the course, so watch the video one more time, but it's not vital knowledge right away. You will get used to all of these terms as we go through the next several videos. And in the next video, we'll talk about performing multiple time frame analysis.